Stocks dropped on Tuesday with an uptick in volatility after a brief rebound on Monday. Investors seem to be contemplating the potential impacts of a new coronavirus variant, along with comments from the Federal Reserve. In part, today's market drop is the reaction to the Fed's latest remarks before the Senate Banking Committee, where the Fed chair said the central bank could speed up its tapering process to end sooner in the face of rising inflationary pressures. In my opinion, this is a direct admission from the Fed that inflation is no longer transitory, it's more likely permanent. So it seems that the only thing that was transitory was the term transitory. Inflation, of course, should not be news to anyone except for the Fed. Therefore, the only significant issue that clouds the situation for the Fed now is the emergence of the new coronavirus variant. But wait, we still have the debt ceiling to solve. That issue will come stumbling down the road in the not too distant future. And since my life is only transitory, let's get to the charts quickly before it's all over for me. Two charts today, beginning with the volatility index, and the symbol in the upper left, as you can see, is $VIX, and we're using stockcharts.com. And this is the 6-month daily chart on the VIX. And as you can see here, we had a nice bottoming and basing phase, and then the run up all the way through here on Friday. This peak here was probably going to be the highest that we're going to get. Most likely, I think most probably, you can see that here too in the upper portion of the chart, which is the RSI. You can see that peak above that 80 level there. Now, it's possible to go up again, but I think we're just going to start calming down and make our way into lower territory, both on the RSI but also on the price chart, and even down here in the MAC. The MAC hasn't topped yet, but I don't think it's too far away from that. So you can see that we're at a healthy level here, and that has caused pretty much chaos in the markets for the last couple of days, and certainly from last week. But last week had low volatility, so it's not necessarily unexpected. But I do think things are going to calm down. We have a bit more volatility to get through, but let's take a look at the charts and see what they show. And now we're taking a look at the 6-month daily chart on the spiders, the SPY. And as you can see here, nice bottoming and basing. And here we have a nice top. It's not unexpected that we came on down. We've been looking at this for the last couple of weeks or so. We're just riding the 50 EMA here. It's possible we could go through that within, say, the next few days, perhaps even into early next week. We'll see here shortly from the oscillators that I think we still have more volatility to go through. But right now, again, it just seems like a garden variety pullback. Moving down here into volume, things were a bit complacent through this period here, and then we had the kick up with the downtrend, and that's not unexpected. It got to pretty high volatility here, but we've seen that in the past at least a couple of times before, even in this 6-month period. But here into the MAC, this is the top, with the fast line being black running through that slow line and moving on down. There's still a pretty good separation, and it looks like things are still accelerating on the downside, so that's why I say expect more volatility. We don't have any real signs of any bottoming yet, but I think this is just going to be a typical pullback, so I don't have any fireworks that are in my expectations coming here anytime soon, at least for now. Into the histogram, you can see that from this top here, we've meandered our way on down, and of course today was a little bit more volatile, a nice downward draft here. We're at about -2, which we hit back here in the mid-September time frame. So it's possible we could go below that -2, perhaps toward -3, but again, we're still really not all that significantly negative. Into the price rate of change, and if we use this back here as an example of a pattern, I think we're going to continue on down here toward that -20 level and perhaps see another formation like this, which is going to take a couple of weeks or so, but it really wasn't all that serious. Same thing here in the RSI. We're at a relatively weak 33.63, but you can see today didn't really do much damage. It is possible to come on down here, perhaps bouncing off of that 20 level, and I would fully expect that based on what we saw back here. Into the stochastics, pretty much the same thing. No real sign of any bottoming or basing yet, but I think it's going to be perhaps toward the end of this week and into next week we'll start to see that bottoming and basing formation, unless some event occurs that we're not quite expecting at this time. And here into the Williams, pretty much the same thing. We're going to do some tracing along the bottom in that oversold territory between that -80 and -100, I would say, for the next week, perhaps 2 weeks or so. So I think all we need to do is continue to evolve through this particular pullback, which is not spectacular in any way, shape, or form, at least yet. It's more or less a garden variety pullback. So just sit on the sidelines and watch. You can do some buying if you have anything that is a target. I would say if it has any correlation with the spiders, the SPY, I would say wait later this week into next week before you pull the trigger. And for today, that's ChewDog Charts. Thank you.